Should you still be buying property in Perth right now? I came out in late 2020, early 2021, and started talking about the data in Perth and how it was a red hot buy. I remember back then, most buyers agents, if not all, were saying, no way, Perth is not a good place. It's a mining town. It never grows. In fact, two of the main prominent data driven buyers agents came out, published videos, published papers to say why their clients will never buy in Perth. Fast forward 3 years, many of my clients have got 100% capital growth while the properties cost them nothing. And now, of course, all the buyer's agent bandwagon has come on and said, yeah, we were go, go, go Perth the whole time. They weren't. But the real question is, should you be buying there right now? And in this episode, I'll give you the answer whether or not you should be buying. We'll go through different charts, including the commodities super cycle, and my recommendation to you at the end of the episode may in fact surprise you. Let's go.
Welcome to the Oz Property Investment Mastery Podcast. My name's PK and I help busy people build passive income by buying top 5% growth and cash flow property and build a portfolio using data without wasting months doing research, spending weekends at inspection or catching flights, or dropping $10,000 to $20,000 on buyer's agents every single time. So if you're confused, lack confidence, and just overwhelmed with all the information and marketing misinformation available online and don't know where to start, then this show is for you.
First chart might blow your mind. What this is showing is how much locations have risen in value since 1980. So you have Perth, you have Hobart, you have Adelaide, you have Melbourne, Brisbane, Canberra, and Sydney. And across the right, you have how much they've grown as an area chart. Now, if we start with Perth, you can see from 1980 to 1989, it had great growth, 9.2% per annum, and we'll get to why in a second as well. Then from 1990 to 2001, it was still humming along, but not as well. Then 2002 to 2010, 14% per annum growth. That was, it's ridiculous, right? And then 2011 to 2022, 1.3% growth, almost nothing. That's why people have been burnt in Perth, and that's why it had that stigma where no buyer's agent would touch it, even when it was about to boom. And then, literally, in the last 1, 2, 3 years, it's been having 16, 17, 18% capital growth every single year. But here's the thing, see this boom period? It's growing a lot every year, but the boom is not gone on for very long just yet. Typically, booms go on, if you talk at a national level, for 3 to 5 years. But you've seen in Perth, big booms go on for 8 years. Big booms go on for 9 years. Now let's compare that to Sydney, where everyone thinks is a stable market because the jobs are there, it's a big city. Yes, from 1980 to 1988, 21% growth per annum. But check out the subsequent 10-year period, 89 to 96, almost 10 years, 0.4% growth per annum. So that's even worse than Perth in the last decade. Then from 97 to 2004, 13.9% per annum. But then, once again, 2005, 2012, 7 years, 1.4% per annum. And then you've got 2013 to 2016, 14% per annum. And then very shallow, and then of course the COVID boom. So you can see that this chart reveals that Sydney is way more volatile. It has a huge growth period, then nothing. Huge growth period, then nothing. Huge growth period, then a little bit of nothing, and then obviously COVID. So you tell me, put it aside your predispositions, is Sydney more volatile or Perth? I mean, the data is what it is. A lot of you will be in Melbourne and you'll be thinking, well, Melbourne's way better. And it kind of is, but let's check it out. 1980 to 1989, 14% growth per annum, huge, right? But then 1990 to 1996, 6-year period where it performed 1.2% per annum, nothing again. So it's normal for property markets to do nothing for multiple years on end, just like Perth did in the last decade. 97 to 2016, that's a huge period, right? 8.4% per annum. And now, obviously, it's going backwards. And people now see value in Melbourne because it's had a few years of going backwards. But what this chart really allows us to understand is that where there's been tremendous growth in the past, in the recent past, the recent or foreseeable future in the near term, medium term is likely to be very shy, very shallow. If boomed just before, then not booming again, to make it really simple for you. Okay? Of course, our human tendency suggests that something's boomed recently, it's going to carry on, but it's actually the opposite. And I've done different episodes proving to you statistically about how the last 10-year period is likely going to reverse in the next 10-year period. So where has the best value at the moment? Hobart had a huge period 2017 to 21. It's only begun its consolidation. There's not much value there. Adelaide, no growth 2011 almost to 2018. Had huge growth over the last 3-4 years. This period is still early, it's still young. I'm not saying it's gonna carry on growing 20% per annum, but it's certainly not gonna have a huge correction anytime soon. Melbourne has been really steady for a long time, and if you add this chart area up for Melbourne 97 to 2016, you see that there's actually a lot of years left before it can consolidate, just like the other cities. It never really had a huge boom, but it performed consistently for over a decade. So there is really a lot of time left for it to come back into life. Brisbane's a great example, almost nothing 2011, 2018, but now, of course, it's gone up so much, but this boom chart area is still in its infancy. There's still time left. Coming back to Perth, now that you understand this, you see the sliver? It is only a sliver. There is so much more value left. But is it the right time to buy it? There's, of course, markets within markets in each of these areas as well. And that's where microeconomic data, 30 to 35 factors to get the right street, get the right property really helps. And so I want you to understand it's very normal for cities not to grow very much for large periods of time. Sydney only 24% from 2004 to 14. Melbourne only 42% from 2005 to 15. Hobart only 30% from 2006 to 16. Adelaide only 22% from 2008 to 18. Brisbane only 24% from 2009 to 19. And Perth only 1% from 2010 to 20. And if you subscribe to this, not theory, but proven evidence that previous returns are inversely correlated to the next 10 years, then you start to salivate and you get really excited because every single city after a lull does really well for at least 5 to 6 years. In the Perth boom, we're only 3 years into it. And the commodities super cycle is something that might get you super excited about Perth as well. You see things like copper, aluminium, nickel, iron ore, gold, agricultural commodities. They go through cycles, long-term cycles. In the War of 1812, including Napoleonic wars, we had a huge rise in the value of commodities. Then you had the first Great Depression in 1824 when those commodities really sank. And then they finally hit their next peak in the US Civil War in 1864. And why was that? Generally, in war times, we see the need to produce much more armor, much more artillery, defense systems. There's a lot of need for hard commodities and to feed people. And so prices go up. Then the Long Depression, 1878, commodities came down again just after the First World War. Once again, world wars are terrific, not for you and me, and I don't wish them upon anyone, but for commodities. Then it had another peak, and then it had a Great Depression in 1930. Everything sank, and the Cold War, November 1980, that was the peak of the Cold War, where both sides, Soviet Union and American allies, were manufacturing so many weapons, never really to be used, but nonetheless, it spurred the economic cycle. Was the next peak and then you had a bit of a drop, and then another peak just before the GFC, and then you had a drop post 2015. So even though folks think that Perth property market is entirely dependent on the mining or commodity sector, we see, as I've showed you in previous charts, that it's consistently performed much like any other city in Australia with its peaks and lull periods. But what's exciting is that if you look at this technical chart, the next 10, 20, 30 years are due for an upswing in the commodities super cycle. Of course, it's a black swan event. We sometimes don't know what will drive that, but my hypothesis suggests that the mass urbanization of world civilizations, burgeoning and growing, expanding middle class, to some extent in China, but they're kind of teetering off a little bit, but especially in Southeast Asian nations like Indonesia, Philippines, importantly, India, South America, and other places, they will need all of the modern amenities that we in Australia are so used to. And that requires steel, that requires iron ore, that requires all sorts of agricultural commodities to build a more sophisticated consumerist civilization and economy, for better or worse. Now, of course, it's up to Australia to make sure it's on the front of that and not let all the demand go to Africa, Simandou mine, West Africa, etc. A project that I've actually worked on while I was working at Rio Tinto in the London head office. But I think the demand will be more fragmented. Right now, it's predominantly from China for Australia. That'll become increasingly so from India and other parts of the world as well for our iron ore and other commodities under the ground in Western Australia. But wait, PK, right now in Perth, you're saying 36% of all property transactions are bought by investors. That's not healthy. That's 50% increase from what it was just a few years ago. Yeah, I get that. Let's just take a step back. Perth was in the doldrums, investor levels were rock bottom. So that 50% rise is off a very low base. Long-term average in Australia, we have about 30 to 35% of all houses being owned by investors. In other words, those are rental properties you can see here. It's pretty average, pretty consistent with other places around the world, give or take. So right now, even though investor activity in Perth is higher than before, it's still at or around long-term averages. Now, if that increases to 40%, 45%, I remember 2016 in Sydney, in the heart of the boom, 46% of all transactions were done by investors. Now, that is when a boom, which is a sustainable increase in price, translates or starts to morph into a bubble, which is an unsustainable increase in price because investors can also very easily sell their properties, whereas owner occupiers are in for the long haul. So Perth is not just there yet, but if it does cross that 40% mark, then I would say stop buying there right now. But as of now, what we're seeing, the demand in Perth is just getting stronger and stronger. Perth listings and days on market, the listings in the blue line continuously go down. Supply is still dropping. A lot of people like to say, oh, Perth is about to bust, Perth is about to crash. But supply is still dropping and demand is still steady. Days on market, which is the orange line, how quickly it takes to sell a property, fell from over 80 days back in the start of COVID, now to just 8 days. And that's not increasing. So supply is falling, demand is increasing, if not staying stable. Then this is just data. House prices are not going backwards anytime soon. And even if listings start to increase, even if days on market start to increase, still house prices won't fall. It actually needs to retrace all the way back to 2018 levels, okay, 5 years ago, for house prices to start falling in Perth. That takes a long time to happen. Same with the rental market. Vacancy rate is dropped down to record lows and it's not increasing, as you can see in this blue line. But, and here is the red flag, rental listings have started to increase for the reason I just said before. 36% of all transactions are property investors, just above the long-term average, but not quite in danger territory yet. But if this orange line continues to go up, rental listings continue, supply comes on, then vacancies will start to increase. Now, of course, once again, it needs to go back to 2018 levels for rents to actually start dropping. That is a long way away, but it's a metric to be aware of. In conclusion, if you have a property in Perth, please don't overreact to what the media or friends or colleagues are telling you, or even people in property Facebook groups. This is not the right time to be selling property in Perth, generally speaking, because prices are not falling anytime soon. But on the flip side, if you haven't already bought in Perth, I'm not saying anymore to go off and buy in Perth. My clients are only buying there in slivers for very particular strategies and no longer under $500,000 or $600,000. I think the best buying window has long gone. We may need to wait a year or two or more to find another buying window, especially in some of the lower socioeconomic areas where this principle of markets within markets really does exist. There, in fact, more than 50% of all transactions are done by investors, and it's very much a bubble. So while I've talked about Perth as a whole, there are markets where it's still great to buy for some strategies, and other markets in Perth where it probably is close to a sell because they've gone up more than 100%, and now vacancy is in fact increasing. But if someone was to stop me on the street and say, "What do you think of Perth?" I would say, generally speaking, prices are only going one way, and that's up. I think the best investors, including my clients, are now starting to invest in the next Perth. Thank you very much.